How's it going, everyone? Welcome back to another Solana update. Unfortunately, over the past week, the lowest point of support of this month of November was lost, putting in a new lower low. Now, this is actually tapped into a major key level of support. And on the shorter Fibonacci scale, it's actually tapped into a bounce location. Whether it actually sustains and reverses the trend, it remains to be seen. I need to see 146 recovered at a minimum to start a further move up. Unfortunately, it is just meant to be tested as resistance to continue lower. But as we zoom out to the weekly time frame, I'm going to show you why this has to be the bottom location, or it puts the bull market and a new all-time high at risk for Solana holders. Now, you've seen previous updates over the last few months that in the moment Solana was bullish, holding key levels of support, looking to break major key levels of resistances. In fact, it had one last level to flip into support. You can see it ended up flipping into resistance. But if 233 was flipped into support, we would have seen a $600 Solana token. But guys, this is the unfortunate trick with the Fibonacci rules. If it doesn't flip into support, these are no longer expected targets. And the bias really does flip just like that. It's just the black and white rules of the Fibonacci's. Now, you might not be familiar with it. You might just think it's bullshit. I've been using the Fibs now for 6 years. And the levels that you're taught are the 618. But I've come to the conclusion that the 786 and the 886 is the true resistance we need to see taken out. In this case, it's the resistance. When we're using Fibonacci's support, you need them to hold. Otherwise, you lose the bullish trend. So we're coming into a very important key level of support here. You can see the 786, 886 here. You really don't want to lose that. Otherwise, you'll tap into these bearish targets. Why? Because equally, when you're looking for the bullish targets to get met, they're only going to get met if this area breaks. So if they fail to break, you don't hit that. So that's why when you're coming to support fibs into the 786, 886, you really want it to hold. Otherwise, you will dip down lower into 84, down to $60 per Solana token, halving from here. To avoid that, I'm going to zoom out. We're on the weekly time frame, and you can see this has been a major key level of support since 2024. Now, there was a deviation earlier this year, and you can argue if this level is lost, there could be one more deviation. But the difference is this time around is that the 200 EMA is exactly on this level, whereas previously it was actually under and actually was used as the support to recover $125. And this is where it pretty much found support on its deviation. We don't have that level of support with the 200 EMA this time round. The last bottom was the 200 EMA. So to keep the weekly trend intact, this has to be support. But on top of all of this, if you want $600 to remain a key target of mine, yes, we need to see the recovery of $233. But to even get there in the first place, we need to see $125 hold. So the micro fib down over here is saying that if this area is lost, we'll dip down into these bearish targets, maybe even as low as down over here. I know that sounds so wild and crazy, but those would be the bear market targets. If you find it crazy, it's not. It went down from $2.60 to $9 last time, or even lower than that. So going down to here is not in the realms of impossibilities. It can definitely happen in the bear market. But that won't happen if $125 remains support. Everything's pointing at this being key level. But on top of that, the Fibonacci's here. Remember that we want to see the 786 and 886 flipped into support to hit the bullish targets. So to keep $600 intact, this needs to remain support. Yes, it can deviate. We've seen it to the left, but there's arguments that with the 200 EMA being exactly on that 786, and then the micro fibs having the 886 here as well, this has to be where it reverses from essentially. So that there's not much more for me to add. We can zoom in on the lower time frames, of course, but that is exactly where it must hold and reverse from. So this has to be the bottom location. We can see momentum to the downside has been dying off. There was a bigger push, but the bulls have stepped in, bringing it back up to that resistance. We want to see it break out and recovering $146. So we're trapped between this resistance here, $146, make that red, and the support, $125. We need to see this support held and this resistance broken to initiate a further move back up. But remember guys, 233, once that's broken, you're immediately targeting $600. At the moment, we're just keeping it valid, the potential scenario, but it's only ever going to happen if $233 breaks. This is just the rules of the fibs. Equally, if this 886 breaks, unfortunately, it's just a fact. $84 should be tested. That's a minimum. Like, subscribe, comment, and share. If you want to get educated and learn the strategy, book in a one-to-one call with myself. Use the links down below for a discount. I've got an ebook as well in a Discord community.